public. I'm right over here. It's been crashing ever since. There's been no sign that e.l.f. Beauty is going up. No sign at all. Like, look at this, guys. It's going straight down. What makes you think it's not gonna go more down? It looks like it could hit $5, $4, $3. It looks like it could completely go out of business. I mean, yeah, it could have good products, but many products are good, I'm sure, that are out there. I'm sure it's not the best product out there, so like what is he talking about? Okay, sure, it has a positive PE, positive earnings per share, but we can see that the outflow is much larger than the inflow for the most part. And when we look at the analysts are not even bullish on this company, and the analysts are usually always bullish. The analysts usually overextend and are bullish on for the most time, except when it comes to like Tesla. They have different mixed opinions with Tesla. But anyways, when we look at e.l.f. Beauty, we can see it's almost at a slow point, nowhere near its highs. But now when we look at the chart, we can see that the pattern that e.l.f. Beauty shows is it's been in a downward trend. Looks like it's going to continue on this trend, this downward path, as we can see in the bottom over here. We look at the financials. We can see the investing, and also the financing has been headed downwards. The operating has been excelling, but the investing and the financing slightly has been on a downward trend. We can see the debt asset ratio has been on a downward trend, and we can see the net margin has been on an upward trend. So this company does not necessarily have bad fundamentals, but the issue for me is, for the most part, is the graph. There's no sign that there's no time in this graph that it's ever gone up. You need to have at least one sign, like if it picks up and it goes above maybe above $13. If it goes maybe above $13, and that'll be like, whoa, now it's growing faster than it's ever been growing. But now we don't have no signs. It could just keep going down. And when Jeremy says he wants to put the majority of his portfolio into this, that is scary. This is another GoPro situation, ready to burst, ready to happen, ready to explode. This is what's going on. So hey, it's his money. Personally, I would not invest in this company unless I see that it has been going up. I see that right now there's no sign that it's ever gonna go up. Never showed a sign. Never, not even in the past. Like, maybe they're just gonna keep on going down. Maybe that's just the way this company rolls, and maybe it'll go out of business or become a penny stock soon. Who knows? It's totally possible. So anyways, there's my review. Smash that subscribe button, hit that like button, and check out my videos. And thanks for watching. We can see that if you would have invested from the start from January 2017, if you would have took $10,000 and you would have invested it in e.l.f. versus if you would have invested in the Vanguard S&P 500 index, what you would have gotten is you would have lost $8,000 with e.l.f. But if you would have grown money with the 500 index. The issue with e.l.f. is not only is it 50% correlated with the market, but the Sharpe ratio and the Sortino ratio are negative. This is bad news. It grows on average of negative 44%. On average, negative 45%, close to negative 45%. This is not good. This is what I'm talking about. And then Jeremy says it won't be hurt in a recession. People stop spending in a recession. People stop hoarding their money. That could really hurt this company bad, and this company is 50% correlated with the market. This is why I disagree. I wonder what got Jeremy inspired into this company. Just because it's affordable? Just because it's cheaper now than it's ever been? It seems like it's gonna keep becoming cheaper. Anyways, thanks for watching, guys. Hit that smash button, hit that like button, and see you next time. We can see that e.l.f. is cheaper than its competitors, and it has an upside to this price target, and it's also profitable. So that's the good news about e.l.f. Beauty. The bad news is that there's no growth forecasts. So this is a sign of weakness in this company. On top of that, on top of no growth forecasts, it offers no dividends. Zero. Zilch. Nada. Zero. So that's one thing we can see about e.l.f. The e.l.f. company. We can see that the net debt levels are 2.3% of the operating profit. 99 million in net debt. 99 million. That's almost as much money as I have. I have a lot more than 99 million, so theoretically I could just pay off their debt. Maybe they should put me on board. You can see the forecast sales is expected to not make as much as it did in the last 12 months. So there's weakness already demonstrating in this company. We can see the forecast sales at 252 million instead of 267 million. This is a sign of weakness. The good news is that it's showing positive 7.3% return on equity. This is one thing we like to see in a company. This is good news. Good news. So there you guys have it. Hit that subscribe button, smash that like button, punch that subscribe button in the face, and thank you for watching. One thing about this company is that they've a certain proximity from the personification of redundant axioms presupposed upon tautological repetitions and enhance their paradoxical paradigms through redundant innovations. Warren Buffett, the billionaire investor, once said, "Be fearful when others are greedy, and be greedy when others are fearful," by billionaire Warren Buffett. And essentially what this means is when traders are greedy, they'll keep on buying and driving the price up and thinking that it's going to keep on going up and up and up. But eventually what ends up happening is the stock ends up tumbling back down to earth from the moon because of greed. And people, that's how people lose a lot of money. And when Warren Buffett says be greedy when others are fearful, what he means is that when others are fearful because the stock plummets and everyone starts selling their stocks at a discount, that's the time you want to start buying companies. That's the right time to buy. But usually people start selling. People call it a crash, and that word crash scares people. Really? Let's change the definition. Instead of crash, let's call it a discount. That's essentially what it is. A discount. That's really what it's all about. So as we can see, the Fear and Greed Index by CNN, what emotion is driving the market right now? What emotion? Right now, the greed is driving the market right now. And the reason for that is, as we can see, the McKellen Volume Summarization Index measures advancing and declining volume on the New York Stock Exchange. During the last month, approximately 8.23% more of each day's volume has traded in advancing issues than in declining issues, pushing this indicator forward the upper end of its range for the last 2 years. And as we can see, the stock price strength, that was the breadth. With the stock price strength, the number of stocks hitting 52 weeks highs exceeds the number of hitting lows and is at the upper end of its range, indicating extreme greed. As we can see, that's why the market kept going back up and up. As we can see, it's in the greed territory. As we can look at the safe haven demand, the difference in 20-day stock and bond returns, stock have outperformed bonds by 2.92 percentage points during the last 20 trading days. This is close to the strongest performance of stocks relative to bonds in the past 2 years, and indicates investors and rotating with stocks from the relative safety of bonds. And when we look at the put and call options, the CBOE 5-day average, the put-call ratio during the last 5 trading days, volume and put options has flagged volume in call options by 36.82% as investors make bullish bets in their portfolios. However, this is among the lowest levels of put buying seen during the last 2 years, indicating greed on the part of investors. When we look at the market volatility, the VIX and its 50-day moving average, the CBOE volatility index is at 15.72. This is neutral reading and indicates the market risks appears low. And when we look at the junk bond market, the yield spread between junk bonds versus the investment grades, investors in low quality junk bonds are accepting 1.74 percentage points in additional yield over safer investment grade corporate bonds. This spread is much higher than what has been typical during the last 2 years and indicates that investors are highly risk averse. When we look at the market momentum, the S&P 500 in its 125-day moving average, the S&P 500 is 1.04% below its 125-day moving average. During the last 2 years, the S&P 500 has typically been above this average. So rapidly declines like this indicate extreme levels of fear. So as we can see, the greed index right here, the greed over time, we are hitting the peaks. We are heading towards the peak greed moments. However, that being said, we still have more greed to go. So if you're heavily invested, this might be the time to get prepared for a downfall. As we can see, that way when you have cash at hand during times of extreme greed, extreme fear, you can buy stocks and from good companies at discounts. When we look at VictorVest Stock Advisory says that in the short term, the market is mildly bullish. VictorVest advocates buying safe, undervalued stocks that are rising in price at this time. It's made $5 million. That's $5 million the past month investing. As you can see, I have more than $100 million. Subscribe to my channel so I can teach you how to make millions. I have 2 goals. My first goal is to help you become a millionaire just like me. My second goal is to turn my 100 million into 100 billion. Like this video, leave a comment on the company or stock that you want me to analyze. I go over graphs, charts, news, quotes, forecasting, prices, rating, and reviews. My job is to help you pick the best companies and stocks to invest in so you can become a multi-millionaire. That's multi-millionaire like me. Subscribe so you can become a millionaire and share this video to help your friend become a millionaire too. Don't miss out. Stay on top of your game and ahead of the curve. The world is your oyster. Make Hey, while the sun is shining. Everyone is subscribing to my channel. Subscribe so you can stay ahead of the curve. So you can come to my show. So you can flow. Comment down below so we both can grow. Like and share this video so everyone can know how to make millions of dough. Subscribe so we both can thrive. Join the millionaire tribe. Watch this video until the end to win the grand prize. It's showtime. Congratulations! Now that you watched my video, you are one step closer to becoming a multi-millionaire like me. I have more than $100 million in my Robinhood account. And that's just in my Robinhood account. I have a lot more in all my banks, in my Webull account, in my M1 Finance account. If you guys want free $200, download the Robinhood app for free using my link below. If you guys want free $1,000, use my link below for a chance to win $1,000 on my Webull account. And if you want a chance to win $25, make sure you download the app using my link in the description below. Subscribe to my channel so I can go over more news, more companies, and more stocks. I'll cover the earnings per share, the charts, the trends, the ratings, the news, the Sortino ratio and Sharpe ratio, market correlation, PE ratio, cash flow, balance, statements, net assets and liabilities, and many more. Just for watching this video, I'm going to give you the chance of winning the grand prize. For your chance to win, subscribe to this channel and comment down below, future millionaire. That's what you want to write in the comments below. Write future millionaire. For every social media website you share this video, it will increase your chance of winning the grand prize. Share this video on Twitter, Instagram, Facebook, Snapchat, to all your social media accounts to increase your chance of winning the grand prize. Congratulations. Don't forget to subscribe to this channel, like this video, comment down below the words future millionaire, and don't forget to share this video so you can win the grand prize. Thank you for watching.
Thanks for watching. If you like this video, consider subscribing. We might make a part 3 soon. Don't forget to like and comment on this video. Oh, and check out our last video here. Bye.
Here we go. Money talk.
Here comes the money. Money.
Dollar. Ching, ching, bling, bling, got the chatter. You ain't talking money, then your talking don't matter. Ching, ching, bling, bling, patent pockets. We take the dollar, can a damn soul stop it. Here comes the new kid on the block. Hold on.
Vad hakten alla, fullfest hela dagen.